Thank you very much, everybody. Ladies and gentlemen, first of all, I would like to thank everybody for sticking around. I do understand everybody's already tired. It's the last session. You all want to probably hit the road, so we'll try to keep it as interesting as possible, okay? So, a massive thank you, first of all, to the IFX team for organizing, once again, a beautiful event. And also, I would like to thank the wonderful speakers. The wonderful speakers who managed to come here on time, and they dedicated their time for this. And honestly, traffic was not very good, but we managed. Everybody managed to get here on time. Okay, look. The subject of this discussion today, of course, is from Caracas to the Gulf. Geopolitics that move the markets, and I do understand now. It could be an itchy subject in a way, and certain things can be said. However, we're here to speak out, to discuss, to say our opinions. However, we might be right, we might be wrong, and no judgment. Okay. However, we the people, as I always like to say, are not always able to change the course of some events. But one thing that we can do is to try and switch on our brains and apply common sense in order to work around things that are affecting us in real life. Now, look, before we go any further, I have to say that everything what we say here today, again, it's is just our own opinion, and also not financial advice. So yes. I want to start off our conversation with a fun question. Now, given our today's topic, the first question is around crude oil, and it's a very straightforward question, which probably doesn't have a very straightforward answer. Where do you think the price of WTI oil and Brent oil will be by the end of this year at the close of the trading session on the 31st of December in relation to where it is trading today? Now, just a quick reminder, today the WTI oil and Brent oil are running roughly around $64.5 and $69 respectively. So it's like I said, it's just a straightforward question, and then we will elaborate a little bit more on that. So if I may start here with you, Dr. Saleh.
Thank you, Darius. Very difficult question to predict prices. I'm going to talk on behalf of the government. Okay. I've been working with the government for the last 30 years with the World Bank as a policy advisor, designing policies. I can tell you that, we know that nothing is predictable.
Absolutely.
But I think if you ask me my opinion, I think that the prices are going to be stable until the end of the year, unless something is going to happen. And if something is going to happen, we might see an increase of 50%, 70% of the prices.
Okay. Farah.
Long or short answer?
Okay, let's look. If you want to elaborate straight away, then please do.
Okay, briefly. I don't think the base case would allow prices to go beyond $75 per barrel.
Okay.
That's considered also the premium risk of geopolitics. It's already priced in between $5 to $10. If it wasn't for that, it would have been even cheaper. Supply is no issue. So any spike would need a huge catalyst, or it would be short-lived, I would say.
Right, I see. So your answer, basically, let's say, to sum up, it would be less than $75, you say?
Correct.
For WTI?
Yes, correct.
Okay. Danny?
Yes.
What about you?
I'm gonna give a maybe safe or more neutral answer. But I would say roughly where we are today, maybe $60 to $65 a barrel with a bit of downside risk. Just because of that, I would say oversupply in crude oil from 2025, that may persist into 2026. Accompanied with, we could see prices remain supportive, of course, with geopolitics.
Okay.
But yeah.
So again, roughly around the same level where it is right now.
Yeah.
Okay, interesting.
Not much higher than that. So.
Not much higher. Mohammed.
Hello? Oh, okay. From my point of view, I believe it's going to stay within the same levels maybe reaching the $70 per barrel. The reason is that I think of it from an inflation point of view. So
Right.
the higher the oil prices, basically, the higher inflation globally, correct? So at the moment, central banks, they want inflation to stay stable as it is, correct? And the, let's say, the MENA region, they want the current prices to stay stable, all right? So Gulf nations, they want the price to stay stable as it is. Now, as we know, there are some geopolitical events, such as the situation in Iran, the Venezuela case, and Trump by himself. So I truly believe it's not going to go down anytime, but it could actually end up above the 70s.
Above the 70s.
Yes, above the 70s. So I'm expecting something around between $70 to $75, but still, we need to understand that most people are already pricing in this possibility.
Okay. And the main reason why do you think it could go above the 70s is purely geopolitics?
I don't want to say purely 100% geopolitics, but...
Or inflation, just like...
So from an economic point of view, basically, if you think about Trump, for example,
Yeah.
right? So what does Trump want, all right? At the moment...
He wants cheaper oil.
He wants cheaper oil, but not to a certain level where it's going to affect his economic activities later on. They want a certain level that is stable for them also, but a low level, all right? The Gulf nations want it a little bit higher, but also stable.
True.
All right? And from that point of view, two different, let's say, directions. But at the end of the day, what do I care about as a trader myself? All right? What are the expectations of inflation later on? That's one. All right?
Okay.
Because inflation affects interest rates.
True.
Correct? And based on the interest rates, it affects the volatility in the market. Correct? From a geopolitical point of view, we are seeing a lot of tension lately, yes? And this by itself supports the idea of pushing prices higher. But again, will let's say OPEC, will they decrease the number of production or increase the production?
Yeah.
That's also another question. Because they want a stable economy, stable prices. It depends on how things are going or folding later on. You got me?
Okay. Because if we're judging, let's say, from just 2025 in a way, how oil prices kind of shifted all the time, it's at least this is my point of view, this is my how I see it, that whenever there was a moment that there was a threat of oil prices going higher a little bit, suddenly OPEC or OPEC Plus decides to ramp up production, and suddenly, it goes down, all right? So, okay, from my personal perspective, from my side, I'm more leaning towards the downside. However, we'll see. I might be wrong. Of course, I don't have a crystal ball. Nobody does. Anyway, so actually, let me now move to another very, I would say again, I am using this word a lot, itchy. We know that recently the U.S. backed off from potentially attacking Iran, right? And the most latest news which I heard today was that he said that he actually is willing to communicate with the government of Iran. Now, it is believed that by taking control of Venezuela's oil production and destabilizing Iranian oil production, the U.S. is trying to weaken the Chinese economy by cutting it off from cheaper oil. Now, do you agree with this thought, or do you actually believe there's another agenda behind this? And actually, let's start from you, Mohammed, because let's go back this way.
So, the way I think of it is the supply chain, basically. Now, the main competitors of the US are the Chinese people, correct? The Chinese government, basically, yeah? So in terms of technology, in order to have better technology, you need to have access to raw materials, correct? One of the main raw materials are oil, correct? Chips also. So the AI industry, basically, it depends on certain commodities in order to produce this AI chips, correct? And in order to tackle that, what did the US do? So they are trying to control the raw of the raw. If you know what I'm trying to say, yeah? So in order to control their advance, the Chinese advance, they're trying to disrupt the supply chain, basically. Doing the situation with Iran, so basically they're trying to control the game, basically, in order to prevent the dominance of China.
Okay.
This is how I see it.
Danny?
Yeah, I think, that could be one way to look at it, preventing China's dominance as well by trying to control different regions across the world. So, but I mean, if we look at, if we look at Iran and if what could happen there, like for instance, if things were to escalate in Iran, I don't think that's something that we'd want to see. So if there was I think the major thing here is a spillover risk that could turn into a wider issue within the region, and that will essentially increase oil prices. So,
okay, I understand. Farah?
Actually, I agree with everything that's been said, and that's obvious with the headlines. Trump takes over Venezuela. Oil is in the middle of the conversation.
Yeah.
India and US deal. Oil is in the middle of the conversation. No more Russian oil. So obviously it's trying to cut ties and be in the middle of it. What does that mean, or why are we discussing this? I think what's interesting about oil is actually for traders, not long-term holders. These headlines and these premiums, as we said, the supply is there. We are in an oversupplied market.
Yeah.
So what does that mean? Whenever we have these kind of headlines, it might be not a recommendation, but it won't be long-lived, and we might see it dropping. So whatever spike is happening because of these headlines, we need to remember Trump wants lower oil prices. It's not going to continue for long. All of this is because he wants to have a stronger role in the oil market, but with lower prices. So it could be a short, or it could be an interesting time to look at oil options as well. I think oil is very interesting for traders, for option trading, but not long-term holders, given what we're hearing in the headlines.
Okay, an interesting thought. Professor, so your thought.
Well,
do you agree with... do you want me to repeat the question?
No, I know the question. And I'm just thinking about two, three points that needs to be clarified. You know, as an economist, we need to maybe remember and remind ourselves about the mercantilism, if you know that. Well, this movement that appeared 300 years ago in the UK and in Europe, where countries were always looking to control the natural resources. So this is number one. So we're witnessing, you know, the same stories with different people, different hearers, different context. So this is going to continue, Darius. Number two, I don't think that oil is a mean. It's not the objective. It's a tool. And I think that looking from a geopolitical perspective, I think that the U.S., I mean, it's not about democracy, by the way. And, you know, when you're right, this is not in their agenda. It's all about using the oil to try to slow down the Chinese economy. That's it. Everything that is happening today in the world is between China and US. And we need to understand and think about that from that perspective. And I think that coming back to your last question, whether the oil prices are going to move or not, I think that every time the US, Trump, would like to slow down the Chinese economy, he's going to use the oil wherever it is, in Iran, in Venezuela, in Syria, like what happened in Syria, Syria, Russia. So oil is used as a tool, and I don't think, and I don't believe that the US and Trump wants to get the oil because it's going to accelerate the US economy. On the contrary, because it's going to slow down the economy of other nations that depends on the Iranian or Venezuela oil. And that's how I see how the prices and how geopolitics are affecting the oil prices during this year and the coming year. And I hope it's not going to continue for the next 10 years.
I see, okay. But in that case, still the question remains, do you believe that they will succeed in slowing down the Chinese economy? Your personal opinion, you know.
I had a discussion in the morning with a Chinese delegation, by the way. And then I came out from the meeting room, and I was really impressed. They try to impress us every day. Every day they're trying to make something that is not only impressive, but this is the point, that is unpredictable. You just look at the news every day, and then you see they announce something that is happening in China, or an invention in China, or China did this and this, and this is unpredictable. And by the way, I was in Paris. I spent all my life in Paris, in France, and I saw the Chinese students that was in the 90s studying in Paris, studying in England, studying in UK, studying in Europe, and now we do realize now what was the role of those people that were studying in Europe, and they are now the engine of growth of what's happening in China. So I think that the US and the West, they woke up suddenly and said, wow, China is going to go much faster than we have predicted. And that's why, in my opinion, the US and Trump, not the US, Trump is very aggressive, and the US is very aggressive vis-a-vis China, because China is moving very fast, and that's a real point. And in some sectors that are really very dangerous for the US, especially G5, space, industry, and communication. So look at what happened in the last 2 years. Trump was trying to intimidate, trying to pull down the China with Taiwan, human rights, trade sanctions, trade tariffs, barriers. As an economist, trade barriers. We were taught in high school that trade barriers is something that has never had to be used.
Yes.
Been teaching, working with the WTO. All my life working with WTO, and going everywhere and say, tariff and barriers, something. So now everything can be used to stop China, in my opinion. Russia is not the strategic target. I think that China is the strategic target, and slowing down the economy of China might affect Russia, because they're partners. But I think that the target is not Russia. The target now is China, and the war that is going between China and the US in lots of parts of the world, especially in Africa. Nobody's talking about Africa, by the way. Nobody's talking about what's happening in Africa between China and the Chinese and the Americans. It's impressive. Now the geopolitical and the sphere has been expanded to Venezuela, to Iran. I don't know how it's going to go with Iran. Things might really get very bad and affect especially this part of the world. But I think that decision makers are aware that we do not need another COVID.
Okay,
and we do not need another crisis.
Okay, that's interesting. No, and to stay, let's say, on this little geopolitical topic, and to kind of follow the thought a little bit, if what you're saying that we need, they want to slow down China, but let's say, Mohammed, do you think in that case you do have to attack Iran? Or actually, is there another, path?
It's not just about attacking Iran. It's basically, think of it from a statistic point of view, all right? So, first of all, who's buying the Iranian oil? China, all right? 20% of the exports goes through the Hormuz Canal, correct? So if you control that, you basically disrupt the Chinese supply chain, basically, as simple as that. It's not just about being Iran.
But then you have to, I'm assuming, I know it's a controversial question and everything, but...
You don't have to attack them, basically. You just have to control them. That's the whole point. Okay. That's the whole idea. So basically, if they can control that, it's not going to be a war. And as a result, the prices changes based on that given factors. All right? So at the moment, traders or investors, they're trying to price in what's going to happen to oil and what's going to happen to gold
Yeah.
based on these expectations. It's not just Iran, by the way. Also, the Venezuela situation. So Trump is basically controlling the country over there. Why does he do that in the first place? What's the main reason? Because Venezuela had a relationship with the Chinese government. So it's not just about making a war just because of war. No, it's not like that. It's basically they're focusing on trying to slow down the Chinese government as much as possible in their technological advancement, basically because they want to stay dominant.
Yeah.
At the end of the day.
You know, it's maybe for some it might sound that we're speaking as if it's like a bad thing or something, you know, that China kind of developing, you know, very fast. But no,
But it's a reality. At the end of the day, it's a reality.
Okay. Danny, any opinions?
I mean, something I want to add to Amr Saleh, he was saying, it's also, I want to add that, you know, one of the major, competitions is also technological advancements, right?
Yeah.
And that poses a threat to the U.S. So not going too much into detail as to why or why not, but that's something to look at as well, because I think every superpower in its history, they had, their technology as one of their backbones or key pillars as an economy, a nation.
Okay, interesting. Farah, if you have nothing to add, or do you have something?
Just to also add it from maybe investors' perspective, geopolitical risk, it is priced in, whether it's gold above $5,000, whether it's silver at the current price. Oil, as we said, there's already a premium of $5 to $10, so it is a thing to look out for. It might give us a bit of a spike, but since 3 years ago, since Russia-Ukraine war, the premium of war was already priced in.
Okay.
That's something that we need to take into consideration. Markets moved fastly from what happened in Venezuela, would probably move fast from
Okay, in that case,
issues.
actually, this is, thank you for leading me to my other question in terms of safe havens. Now, again, because we're living in such an unstable world, and we know that recently we saw these crazy moves in precious metals. Partially, of course, it's driven by geopolitics. Now, I want to know, let's say, your thoughts on this a little bit. Do you think that precious metals will remain as the safe haven when, let's say, geopolitics start shaking the world in a negative way? Do you think that investors will still run to these metals, or actually we're going to have a little bit of a different story nowadays where if the tech sector starts declining, you will see if it will start pulling the markets down, you will see a shift away from precious metals. Now, which is gonna outpull which, So let's go this way again.
Well, Darius, nothing is safe. Nothing is stable. We do usually talk about sustainability. I hate that word. Because it means everything and nothing at the end of the day. Nothing is sustainable, They used to say that, sustainable car, sustainable wife, sustainable life. Everything is sustainable, but nothing is sustainable. But I think, coming to your question, I think that metal will remain. No, I don't think so, because nothing is going to be unstable. It's one of the tools. It's one of the things that might be an alternative. But maybe tomorrow Bitcoin might be the best alternative, maybe.
Okay, so the short answer to this, you would say, we don't know, right? Okay. Farah, what's your thought on
I'll disagree a little bit. Obviously, nothing is safe. But when we're discussing the momentum that we saw in gold and silver metals in general, there was something overlapping. It is a safe haven. It is highly liquid. This is why when a drop in the market happens and the gold goes down, that doesn't mean gold is not a safe haven. It is being activated as a safe haven. I am looking for quick cash. I'm looking for quick liquidity. So I sell my gold because I need cash. It is activated as a safe haven. But there's another layer that happened. It was chasing momentum. So yes, it was even higher in volatility than Bitcoin Imagine. But that's on a short-term level. Gold is not going to be super volatile for 3 years. And my exposure to gold is because I want to hedge and have part of it for a long term. It is a safe haven, it is a hedge, but also sometimes at some moments you would see this big momentum, big leverage towards it. Silver, obviously, it's a beta asset, it's even more, I would say, volatile. But the concept, we did move to that because there's a genuine need for safe haven demand. This is why big banks are buying gold, not because they're chasing momentum, not because they want to make profit out of $600 drop of a day. They need it because they consider it still as a safer haven. Not alone. I think now the mentality should switch to take into consideration volatility, maybe diversification, but gold remains a big player.
So you're basically a gold bug. You believe in gold, right? Yeah.
Compared to other assets,
Yeah.
as a safe haven, it remains one of the main.
Okay, interesting.
Yeah.
Danny.
Yeah, I pretty much agree with what Farah said. But it's important, I mean, also to mention that, continuing to the point is that gold is in this perfect storm of like multiple tailwinds. And I think what's changed now is the speed of demand, right? The speed of demand for gold, and you have all these multiple tailwinds from, a lower interest rate environment, weaker dollar, geopolitical risk, of course, and as was mentioned as well, central bank buying. So I think this was last week or 2 weeks ago. I think the Polish central bank increased their reserves by, I think it was around 50%, something like that. I mean, that's a very big number. So I think you're going to see those percentages go up across the board as well. Short-term correction, yes. What did we do? We did 65% in 2025. I forgot what the figure was for the previous year. We had a 17-18% drop, but that was bought back quickly, We're back above 5,000.
Yeah.
So
Okay. Good thought. Mohammed.
So, because we have a short time to answer, basically.
We're gonna squeeze it. Yeah.
So, short answer, basically, I think it's gonna stay the safe haven forever. I'm gonna say,
Okay.
even if there's nothing safe, let's say, or let's say there's no such thing as risk-free, basically. Yeah. But still, if you think about it from a fiat currencies historically they decrease in value over time, and in order to back your economy, you need to have something sort of value, basically, which is gold. That's why central banks are actually purchasing, since there are a lot of geopolitical tension happening. They need to back their economy with something that is already valuable, which is gold. That's the first thing. Another thing that is actually pricing in or actually affecting the gold prices is the interest rates, the direction of interest rates lately. All right. And another thing, which is, if you think about it from the U.S. perspective, Jerome Powell is going to leave. He's not going to stay within his post, correct?
And we're going to see some cuts, probably two maximum this year.
But nobody knows how much, 100%.
Okay, but this is the thing. We're going to have there's going to be a new Federal Reserve chair coming in, Kevin Warsh. We'll probably already all know that, However, the guy is more in favor of hikes, So either he's going to have to do a full 180 turn from that. Yeah, but
exactly, that's the point. So people were expecting someone who's a little bit more, let's say, someone who decreases interest rates, because Trump is actually pushing for it. And now someone else is coming, which is why the jump in gold happened really fast lately. It's not just geopolitics, by the way. It's also the expectations of what's going to happen in interest rates later on. All right?
The recent sell-off that we saw, right? This is the interesting part, where the recent sell-off we saw in the precious metals, that everybody maybe thought that it's in a slight improvement in geopolitics or anything, but all has to do with CME Group, changing their margins, from a fixed rate to a percentage, and suddenly it becomes a little bit more expensive to hold the contracts. Now, do you think that examples like these just show that sometimes maybe geopolitics is okay? Tensions remain. But you have a little twist in the financial system, and suddenly everything collapses. So in the short run, don't you believe that gold and silver might actually lose their shine a little bit and fall even more?
So to answer your question, basically, the way I think of it is I look at historical data. So
Okay.
in the past, I don't know, 20 years, the ratio is what, 1 to 50? Something around that. At the moment, it's not 1 to 50. So in order to restore itself, by the
Yeah.
way, to stay as it is, either silver needs to go down or gold needs to go up way faster than silver. So I don't want to say one of them is going to lose its shine, but I'm going to say someone is going to outshine the other.
Well, if you ask me, probably I think that silver will probably fall quicker, and then it will pull gold after it. Because if we look at 1980, 2011, and now period, right? Silver. This is the third time it has seen such a parabolic move, right? Okay, and if you want it or not, what comes up must come down eventually. So, do you believe that still? And that's what I'm saying. That's why. Is silver and gold still one of those safe haven assets, at least in the short run or something? Long run, yes, probably, in a matter of 10 years span, again, yes, most likely. But in the short run, for all, the traders out there.
In the long run, as long as I'm seeing the AI bubble stays, silver will stay shining, from my perspective.
The bubble. You're referring to the bubble in...
I don't want to say as a bubble, but basically the main focus of people lately, which is AI, which is a fact.
Okay.
Regardless if it's a bubble or not, it is something that's actually affecting our daily lives. And based on that, in order to have these AI continuing, you need to have the chips, correct?
Yeah.
And part of doing the chips is basically silver, also part of
Exactly.
it. So there will be always demand on silver, and as a result, you're going to see the price of silver is going to stay going up. The idea is now whether the dollar is going to lose its value or not, because it's priced in dollar, correct?
Well, the dollar most likely will continue depreciating unless suddenly inflation picks up. But because, we know that Trump doesn't need a strong dollar. You need to continue, attracting investment. You need to continue building factories inside the country. So you don't need a strong dollar.
I'm with you, but at the end of the day, he got a huge debt that he needs to pay, and in order to depreciate that kind of debt, basically, he needs a little bit a weaker dollar somehow. This is how I see it in the long run. But again, Trump is not a person who's looking for the long game. He's looking for his term only, So regardless, in the coming years, and this is not just based on my opinion, if you follow any big banks, basically reports lately, I really recommend people to actually see the in Gold We Trust report. It is one of the best reports I've seen in regarding the analysis of gold and silver in the long run.
Okay.
I'm expecting that gold will definitely outshine the silver, but it doesn't mean silver will fall that sharp.
Right.
It's gonna stay somewhere
so,
there.
In that case, I can see that we're kind of ran out of time a little bit, but but I want to just quickly ask you one last little question, just your personal view on 2026. From the financial markets perspective, from the geopolitical side, do you think we're going to have another crazy year like 2025 was? Are we going to have more little conflicts sparking everywhere, or actually it's going to be a little bit of a more calm year? Dr. Zan.
Well, Darius, no one can predict. No one can.
True, I agree. I know it might be a rhetorical question.
But, in 30 years, there are things that might make you able to read what might happen. I think yes, we're gonna have. We might have not a crisis, but I think that we're gonna have a slowdown, because as you said, when things goes up, it should go down.
Come down eventually.
And we went very fast in some countries. We went very fast in some commodities, and I think that we might see a slowdown, especially. And I'm telling you that there are things that when you look at, you can read what might happen. So you can read that something's going to happen in 2026 for sure. I don't know. I'm not. I mean, I want to be
In the markets or from the
no,
geopolitical
geopolitics,
side?
geopolitics, and it's
okay.
and sure it's going to affect. Sure, it's going to affect the market. Something should happen, or in Iran, or Venezuela, or somewhere else. Things are very much unpredictable, but I mean, we can predict that something is going to happen, and this is going to affect the market. Number two, we went very fast, and I think that there's going to be a certain kind of slowdown in some regions, in some commodities. Since there are lots of countries and organizations, institutions, and super economic powers in the world, I'm not talking about countries that wants to control the world. So I can predict that we might have another something that's going to appear, and that might not replace gold or bitcoins, but something that might appear to play another important role in trading.
As a safe haven.
Yeah, I don't know why not. For example, I don't know.
Japanese yen?
AI coin, for example. You know.
What about Japanese yen?
Yeah, maybe. Why
Okay.
not? So knowing and when we see how AI is affecting the market and how affecting our life, maybe you might see something like AI coin or Bitcoin or something like this. Unpredictable also.
Okay. Farah, another crazy year?
Volatility remains. So I'll try to say two, I don't know, not advice, just an idea to keep in mind. Traders, it's time to think beyond trading. If you're looking for low risk, maybe you can look for gold still for long term, regardless of the volatility that you'll witness in a month or two. Bonds, especially short-term bonds, is actually safer somehow at the time that you were living. And obviously defense stocks, in case you're looking for a mid-risk, you're ready to take some risk, I think AI now is good. Valuation, it was super high, it was overvalued. Now we are at really good levels. We are at a discount, 8% almost yesterday discount, while before it was way overpriced. So maybe I still have room to grow from here. And if you're a high risk taker, you can also still look for better assets like silver. It might have another bull run somewhere around the year, yes.
Understood. Okay. Danny, very quickly again for you from your side. Another crazy year?
Yeah, I think so.
Yeah?
I think volatility is here for sure. I think, yeah, we may get some nice drawdowns. Could be potential dip buying opportunities for the stock market in particular. I still think, yeah, big tech is a good place to be in. You have, good earnings growth coming out of the U.S. when looking at the U.S. market. The AI growth story, I think we still have, some more room to grow as well.
No, you don't see the bubble, no? Not yet.
I mean, everyone sees the bubble, but nobody knows when it pops, right?
Nobody wants to admit that.
Nobody wants to admit it, right? And yeah, bubbles can keep on growing.
Yeah, absolutely.
Right? Keep on growing, and it could be delayed or whatnot. But I think the best way to look at this is, if let's say you're in the stock market, are you holding good names? These good names will continue to outperform in the long run, regardless if we see a market crash. Companies. And you should view that. I mean, if you want to build yourself as an investor, even a trader, as that these are good times to get in, enter the market.
Okay.
So yeah.
Thank you.
And gold higher.
And gold higher.
Yes, exactly.
Mohammed.
They're moving in line.
Short answer, as long as Trump stays in reign for the next 3 years, I'm expecting 3 crazy years, not just this year. I'm going to be honest with you.
Yeah.
If you ask yourself 2 years ago, before Trump actually started or coming back, did you ever ask yourself that we were going to discuss something about Greenland, Venezuela, the Iran case? Maybe Iran, yes, maybe, I don't know, but still, Venezuela, Greenland, these cases, myself, I've never imagined one day I would actually hear something from the US saying something to their own ally, basically. So, crazy stuff happening. And based on that, volatility is actually reaching to its high levels, yes? So, why should I expect something lower as long as he's there? No. I'm expecting
Okay.
something extremely higher, actually. A crazier year, actually.
Okay, okay. Right. Ladies and gentlemen, dear panelists, I would like to thank you. And I would like to thank you as well for sticking around. I know that the board keeps on blinking, saying, "Dude, your time's up." But ladies and gentlemen, thank you very much, everybody, for
Thank you.
and give a round of applause to our panel. Thank you, everybody. Thank you.